Welcome to your Daily Five. I am today's host, Bruce Fraser. Let's get started. This is a story about value versus growth, two seemingly opposing positions in the market. This is a relative performance story. If this is a Wyckoffean approach, if you're interested in Wyckoff, watch Power Charting on StockCharts TV, Fridays 3 p.m. on StockCharts TV, and with replays thereafter. Here is our chart of the value versus growth dynamic or the battle that is taking place. This is a relative performance chart. It's a ratio between the Vanguard Value ETF as our proxy for value and the Triple Q Trust, which is our proxy for growth, the Nasdaq 100 index. Since 2013, dramatic downtrend in this case suggests that the triple Qs, the Nasdaq 100, has been dynamic leadership throughout at the expense of value. Value has performed much more poorly, slowly than growth has. In 2020, this accelerated into a climactic surge. Notice that we have seen a throw under of this very important long-term channel right here in the third quarter, and now it's paused here, throw under, oversold. This is a classic condition. Selling climax is how a downtrend will conclude in the Wyckoffean world. If you look over here at this 4-hour chart, this is a zoom in of that period just below the channel. There's a steeper channel. If you look closely, this is the steeper channel. It throws under this channel in a selling climax, tests it in a spring to a minor new low, an important rally, and then a series of tests. Well, look what's happened. Now value against growth has jumped above its downtrend line and is attempting to turn up. There's three forms of support underneath the ratio here. And so if we can see a turn back up and in, this could be very dynamic. Here is the Nasdaq 100, just a daily bar chart, very dramatic chart, uptrending channel, a climactic surge into September. Wyckoff says that important trends end with climaxes. So you can see one over here in February of this year. There's another one here that's taking place into September, and it fails down and out of the channel very quickly and then attempts to consolidate and rally up to the channel, can only spend a few days above, turns down off of that. It's been weak ever since and now is trying to get to the support line. This could be a sign or indication that growth stocks as measured by the Nasdaq 100 are now range bound and possibly under distribution. Okay, well, hold on just a sec. We are going to look at 3 growth stocks and then 2 value stocks very briefly. This is a distribution type structure here in Akamai Technologies. This is an uptrending channel showing that the Akamai has been in an uptrend, very dramatic relative strength uptrend here. Also, you can see right into March with a climactic surge in the relative strength. Akamai goes to new highs into July, August, but look at the price climax here, buying climax, then an up thrust, which is a secondary test type structure, very sharp decline, minor sign of weakness, and a last point of supply. All of this comes with diminishing or declining relative strength. Akamai is no longer leading. It's become somewhat of a relative strength laggard. Could this be distribution? Look at the sharp decline here as it attempts to go to a longer term uptrending line and also to the bottom of the channel. Support should hold here pretty soon and give it a rally attempt. We'll watch that very closely. So Akamai is a very interesting growth stock that may be losing its leadership nature. Palo Alto Networks, another one. This is a weekly chart. Akamai was daily. Here's a buying climax, automatic reaction, range bound condition. We can see that Palo Alto Networks has been losing its relative strength here with a no longer with higher highs and higher lows, but now a series of lower highs, indicating that this potentially could be distribution. So we have an upthrusting action here that immediately fails. We call this upthrust after distribution. Then a secondary test, which is a rally of poor quality, and now it's moving easily back down into the middle of this range bound state. We will watch this closely. Could this be distribution? Lastly, we're going to look at, among the growth stocks, a bellwether in Netflix. Netflix has an important uptrend. The relative strength is making higher highs, higher lows, which shows that its leadership, now all of a sudden it is no longer making higher highs anymore. Buying climax surge above the channel. This is an overbought condition, throw over, automatic reaction, elements of a trading range. Could this be distribution? Look at the secondary test and the upthrust action and the ease of movement off of these resistance areas with lower prices. Big gap here as it goes to the bottom of the channel. Two forms of support here and important lows, needs to hold and rally off of this level. We're not making any investment or trading recommendations here. We are showing these as bellwethers for growth, but keep a close eye on them and consider this distribution dynamic. Now here is Ford, which is one of our value components. Go to wyckoffanalytics.com, look up the Wyckoff market report, where you can see that we have recommended Ford in the Wyckoff market report letter. Here is a hinge tightening range bound conditions. This is a classic sign of absorption. This occurs in accumulation. Look at the dramatic rally off of this accumulation type structure, showing stock is in really strong hands. Sign of strength. Then it goes into another range bound condition, which also is what we call a hinge, which is a lower series of lower highs, series of higher lows, goes into a hinge structure. Again, good evidence of absorption, beautiful jump off of a last point of support. If you're interested in these terminology, these are just classic Wyckoff terms to identify the evolution of trends, trading ranges, accumulation, distribution. Look at this beautiful uptrend, could get up to the top of the channel, which would be a continuation of a beautiful move, and very well could be the beginning of something big. Relative strength, higher lows throughout, leadership characteristics. And finally, Dunkin' Donuts. Look at this beautiful uptrend here off the March lows, goes into a reaccumulation structure, pauses in an absorption type hinge structure. Stock is under accumulation, has a beautiful uptrend. Relative strength is accelerating, showing value leadership. Then a beautiful gapping move here on news, as it appears that Dunkin Brands is potentially going private or being absorbed by another company. This was also profiled in the Wyckoff market report. And with that, gotta go. Thanks for being here. See you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.